Hello everyone, my name is Melinda Jennison. I'm the Managing Director here at Streamline Property Buyers. Today I've prepared a market update to help you understand what has been happening here in Brisbane in the property market, and we've dissected the data into both the unit market and the townhouse and house market so that you can get a better understanding of what is happening across the city. First of all, we'll start with a market snapshot. So listing volumes across the month were up 5.15% here in Brisbane. The auction clearance rate was 61.8% throughout the 4 weeks of July. Buyer activity is still fairly high, especially for the more affordable segment of the market and those properties transacting around the median value for Brisbane. House values were up 1% across the month. However, the unit and townhouse market, strong performance with 1.9% growth across the same period of time. Gross yield for all dwellings sitting at 3.7% here in Brisbane. Looking at total listing volumes, they are higher than last month. So when we look at the month-on-month increase, total listings were up 2.87% in July compared to June. However, when we look across the last 12 months, total listings were down 4.16% over that 12-month period. Now, the total listings here on this graph represents the total combined height of each bar, whereas the new listings represents the new properties available for sale just in the last 30 days. So when we look at the change over the month, new listings were 5.15% higher, which is reassuring. And over the last 12 months compared to July last year, new listings are actually up 9.31%. So whilst this provides a level of reassurance for buyers, when we look at that long-term trend, we can still see that listing values are well below where they have been typically over the last 5 to 10 years. And this is why we're seeing that strong upward pressure on prices here in Brisbane. Sales volumes often a reflection of buyer activity, and over the last 12 months, sale volumes have increased 8.8% here in Brisbane. So there's strong buyer activity in the market. The buyer demand is still also very strong. So we can look at clearance rates and how they're tracking month on month. Throughout July, clearance rate sitting at 61.8%. That's slightly down from where it was sitting the previous 2 months. However, that is still well above the long-term average here in Brisbane, where typically auction clearance rates struggled to be higher than 50% because we're not a typical auction city. So that's where we're different to the likes of Sydney and Melbourne. However, days on market, they are actually the same as they were 12 months ago. That's currently sitting at 20 days. I will say though, based on what we're seeing anecdotally on the ground, good quality properties are still selling after the very first open home. So if you are a buyer in the market at the moment, it is so important that you are ready to make quick offers because a lot of agents will close offers after that very first open home here in Brisbane. Looking at dwelling values across the month, you can see here CoreLogic data shows Brisbane dwelling values increased 1.1% across the month, slightly behind Adelaide and Perth, which had more superior growth on a monthly basis. Quarterly dwellings are up 3.8% in Brisbane, annually up 16% here in the East Coast capital of Brisbane. Current medians for all dwellings sitting at $873,987. So that median value is definitely sitting above Melbourne's median, which is around $781,000, and it's also above Canberra's median, which is sitting around $870,000. So based on dwelling values, Brisbane has become the second most expensive capital city market across all of Australia. However, dwellings data needs to be considered carefully because it combines the house values and the unit values into one data set. We're going to break that down as part of this presentation today. Looking at the PropTrack data, we've got Brisbane showing the annual and monthly price growth being positive in line with CoreLogic data. We can also see here on this data set that Brisbane as well as Sydney, Adelaide and Perth are all at their peak in terms of dwelling values. That means it's never been more expensive to buy in these 4 cities. However, Melbourne is 4.4% below peak, Hobart's 9.44% below peak, Darwin and ACT also below their peak property values. So there's definitely different things happening in different markets around the country. Looking at price growth segmentation across the 3 months to the end of June, we've seen the bottom end of the market, the lower 25% of property values here in Brisbane, grow at the fastest rate. That is 5.4% growth over the 3 months to the end of June, compared to the middle 50% of property values, which grew 4%, and the top 25% of property values, that's the most expensive segment of the market in Brisbane. It's also positive in terms of its price growth, but 2.7% growth experienced in that segment of the market. I will say, though, this is all dwellings. So this will incorporate units and townhouses, as well as houses within the whole data set. And we pointed out on that very first slide that the value of units and townhouses has shifted 1.9% across the 4 weeks to July, compared to the house market, which has only shifted 1%. So a lot of those units and townhouses will fall in that lower 25% of property values, and that must be considered when looking at any price segmentation data that are based on dwellings alone. Looking at the 12-month change across all capital city markets around Australia, according to CoreLogic, Brisbane's growth has experienced 16%. This is dwellings again. That's behind Perth at 24.7% and Adelaide at 15.5%. At the same time, despite the same economic conditions, broadly speaking, at a national level, we've got Melbourne that's changed 0.2%, Hobart's gone backwards 1.2%, Darwin and Canberra relatively flat, and Sydney sitting at a 5.6% increase. So this just proves that Australia is not one property market, and that all markets have local drivers of supply and demand that impact on the direction of those property values. Looking at the last quarter, we can still see Brisbane, Adelaide and Perth pushing ahead of all other capital city markets, as well as regional markets around Australia. And this is largely a supply-driven uplift in values, because what Brisbane, Adelaide and Perth all have in common is that really tight supply and listing volumes well below those long-term averages. Now we're going to break down into house values and unit values. So looking at CoreLogic data, house values in Brisbane shifted 1% in the 4 weeks of July. Quarterly, that equates to 3.4% over the last 3 months. And the annual growth in the housing market here in Brisbane has been 15.2%. So to buy a house in all of Greater Brisbane at the median value right now, you need around $966,000. Melbourne's median value is $944,000, and Canberra's is $984,000. So it still sits Brisbane as the third most expensive capital city market in terms of its median value, behind both Sydney and Canberra. So theoretically, Melbourne's median value is lower than Brisbane's now to buy a house. However, when you consider what a house would cost you 5 kilometres from the CBD here in Brisbane, compared to what a similar house would cost you in Melbourne at a similar distance from the CBD, you will probably find that Brisbane is still more affordable in terms of what you get for your money. And that's very important for people to understand if they are considering Brisbane right now. Looking at the house values according to PropTrack, again showing positive price growth throughout the month of July, and annual growth still also positive, and that puts the median value around $950,000, which is very similar to that CoreLogic data. Now, units. The unit market in Brisbane has been outperforming the house market on a monthly, quarterly and annual basis. A lot of this could be driven by affordability and a shift in the way we're wanting to live as well. Monthly units in Brisbane increased 1.9%. Quarterly, that rate of growth is 5.8%, and annually just under 20%. We're sitting at 19.6%. A change in median values in the unit market in Brisbane over the last 12 months, which is huge. The median value for a unit across all of Greater Brisbane right now is sitting at around $638,000. That is more expensive than Melbourne, Canberra, Darwin, Hobart, Perth and Adelaide, but it's still cheaper than Sydney. So units have definitely surged ahead in terms of their price growth here in Brisbane very recently. According to PropTrack data, the same positive price growth trend has been experienced in the unit market on a monthly and annual basis, and it's sitting at a $663,000 median value according to this data set. Having a look at property value changes on a monthly basis, this data is showing the percentage change in property values in the house market being the dark lines and the unit market being the light blue lines on a month-by-month basis. Now, in that second circle, you can see over the last 5 months, the unit market has absolutely outperformed the house market in the rate of monthly price growth that has been experienced. We also saw throughout the interest rate tightening cycle of 2022, the house market was far more impacted than the unit market here in Brisbane in terms of those negative monthly price changes. And this is largely driven by affordability. The unit market is a much more affordable segment of the market compared to the house market here in Brisbane. Vacancy rates, there's been no change month on month. Vacancy rates here in Brisbane are currently sitting at 1.1%. So that's actually very tight supply. Apologies, this graph's showing the CBD. All of Greater Brisbane is actually sitting at 1.1%, and there's been no change month on month in that particular data set either. Looking at rent price growth, it is still strong. So in the unit market and the house market, the annual change in rents has been 7%. Now, tenants will be relieved to know that the rate of growth is slowing down. Last year, we were somewhere between 12 and 15% in different segments of the market in terms of that annual rate of growth. So it is slowing down. However, a 7% annual change in rents is still well above the long-term average. So a lot of this is driven by supply shortages. Again, low vacancy rates and an influx of tenants wanting to call Brisbane home has put that upward pressure on rental prices, which will continue until we start to see more supply come into the market, which is something that is a long-term problem that we have. So in summary, Brisbane's unit and townhouse market is definitely outperforming the house market, and that's evident on a monthly, quarterly and an annual basis. And a lot of that is driven by affordability. Additionally, the forward supply or the future supply of the higher density dwelling type here in Brisbane is really limited because the cost to construct that developers have ahead of them is very prohibitive. So that's why we're not seeing cranes in the sky, and the future supply pipeline of high density units here in Brisbane is definitely limited. Also, the cost to bring those units to the market is becoming too expensive for developers to build them, especially if they are targeting a budget end of the market. Supply and demand also, those imbalances absolutely continue to exist. There's less supply in a market where demand is elevated, and because of that, we're seeing that continuous upward pressure on prices. We are seeing different segments of the market moving at different paces. That's evidenced by the unit and the townhouse market pushing well ahead of the house market. However, there's definitely certain pockets in Brisbane that are still in much higher demand than other pockets as well. And that's something that an expert buyer's agent can help you with to understand local supply and demand metrics that no data will ever be able to provide for you. We expect the trajectory for Brisbane property prices to remain upward, and that's simply driven by a lack of supply in the absence of new dwellings coming to the market or sellers letting go of their properties. We're likely to see supply remain very restricted. At the same time, demand has been heightened and elevated due to population growth. Even though interest rates are higher, we're definitely still seeing people with the money to purchase properties, especially in that more affordable segment of the market, and that's playing through in some of the data that we're seeing as well. I hope that's been a useful market update. If you would like to connect with us, either to explore using our services for your investment purchase or home purchase here in Brisbane, you can book a call by scanning this QR code. Alternatively, there's a lot of free resources that we provide that will be available through this particular code as well. Thank you so much for your time. It's been great to chat to you again, and we'll look forward to bringing you another market update next month. Thank you so much, and bye for now.